ये बजट अमृत काल का एक महत्वपूर्ण बजट है।
Hello and welcome to our special Budget Day edition of Power Breakfast. I'm National D'Souza and joining me is Mangalam Malu. Morning Mangalam, big day coming up.
Big day coming up and we're always excited for it, always ready for it, and CNBC TV 18 is your budget headquarters. So let's kickstart the show, Nigel.
Well, let's get straight then to the top stories early this morning. It's the day, and in a few hours from now, Finance Minister Nirmala Sitharaman will become the first finance minister in India's history to present 7 consecutive union budgets. This amid great expectations of growth impetus with prudent fiscal management.
The union budget is likely to be a continuation of the February vote on account. Sources say the government is likely to opt for fiscal prudence along with welfare measures, ad expenditure, tax revenue, borrowings, interest payments, and government capex targets are unlikely to see big changes.
Prime Minister Narendra Modi ahead of the session says the exercise will focus on the pre-poll promises made to the people. This can spell effort to create more jobs and provide more support to the needy, even as political compulsions may dictate special packages for Andhra Pradesh and Bihar. Also important to track will be how the largesse from RBI's hefty dividend is expended.
Ahead of the budget yesterday was the economic survey which projects India to grow at a rate of 6.5% to 7% in FY25. The fiscal deficit also expected to dip to 4.5% by FY26. Chief Economic Advisor Anant Nageswaran is confident of sustaining 7% growth in the long term, also encourages a pickup in private capex.
And Wall Street recovers some ground from last week's sell-off as tech stocks rebound. The S&P 500 sees its best day since the 5th of June, while the Nasdaq gains over 1.5%. Asian markets also open higher, following a strong close on Wall Street. The Gift Nifty is suggesting a higher start for the Indian markets.
As we said, it is D-Day, so in a few hours from now, Finance Minister Nirmala Sitharaman will deliver her 7th union budget in the Parliament in what will be the first economic statement of the new NDA government. The Finance Ministry finds itself having a surplus of funds, and how that will be distributed will be key to watch. While stops for Andhra Pradesh could continue or could also be on the cards, Prime Minister Narendra Modi has promised a budget that will cater to his poll promises and has also stated that the budget will set the direction for India to be a developed economy by 2047. So let's dive straight and first listen in to what the Prime Minister's comments were.
ये बजट सत्र है। मैं देशवासियों को जो गारंटी देता रहा हूं, क्रमशः रूप से उन गारंटियों को जमीन पर उतारना, इस लक्ष्य को लेकर के हम आगे बढ़ रहे हैं। ये बजट अमृत काल का एक महत्वपूर्ण बजट है। हमें 5 साल का जो अवसर मिला है, आज का बजट हमारे उन 5 साल के कार्य की दिशा भी तय करेगा और ये बजट 2047 जब आजादी के 100 साल होंगे, तब विकसित भारत का जो हमारा सपना है, उस सपने को पूरा करने की मजबूत नींव वाला बजट लेकर के हम कल देश के सामने आएंगे।
Well, let's go across to Parikshit, who's standing by to tell us what could be on the budgetary agenda.
Budget 2024 to lay the foundation for a Viksit Bharat by 2047, said the Prime Minister at the start of the budget session. The the government is expected to continue with a record capital expenditure outlay with a strong infrastructure push. The budget is likely to have targeted interventions for job creation, rural growth, MSMEs and measures to ensure greater inclusion of women in the workforce. On the personal income tax front, sources say that any relief for the common man could only be in the new tax regime to ensure more people transition to it. Expectation is that the government may raise the basic exemption limit, standard deduction or rationalize income tax slabs and rates further. The industry has also sought rationalization and reduction in slabs for capital gains. Sources say in different meetings, the Prime Minister has stressed on the need to stick to the path of fiscal prudence and rein in fiscal deficit. It remains to be seen how the government will address demands for special assistance by Andhra Pradesh and Bihar. Andhra Pradesh Chief Minister Chandrababu Naidu, for example, has sought 1 lakh crore in assistance by the centre for state reconstruction. The industry is also looking forward to see how the government operationalizes the 1 lakh crore corpus for R&D that was announced in the interim budget. The industry has been asking for clarity on the FAME 3 scheme for electric mobility. This has an outlay of 10,000 crores. It remains to be seen whether the FM will make a mention of this in the union budget. Finally, creating more formal and skilled jobs and making it easier for the middle class to acquire and build homes is likely to be a priority in the union budget.
All right, Pariksha, thanks a lot for that. But you know what? With the union budget just hours away from being tabled and presented, there are expectations from states as well. Andhra Pradesh CM Chandrababu Naidu hopes to get a special package to rebuild the state and to fast-track projects with fresh investments. So let's go across to Jude, who brings us more on those.
With just a day to go for the union budget, the state of Andhra Pradesh and Chief Minister Chandrababu Naidu has requested for a total corpus of 1 lakh crore rupees by way of that much hyped special economic package for the state. Nearly 50% of this, that's 50,000 crore rupees, Chandrababu Naidu added, must be allocated or set aside towards building his ambitious greenfield capital of Amravati. The justification really is that a corpus along these lines by way of the package will be required to quote-unquote rebuild Andhra Pradesh after what the state claims was an unjust bifurcation of the state back in 2014. Another project of interest is the Pallavaram project, which the state says should see an allocation of approximately 12,000 crore rupees. Now, that's what the state government wants. Let's also take a look at what the industry wants by way of that special package. First up, specific focus on 3 sectors, pharma, steel and infrastructure in the state of Andhra, even as central guarantees, the industry said, must be required insofar as investor sentiment and investment policies are concerned, especially given that 2 governments came and went, but little moved on the ground back here in Andhra Pradesh itself. But it's not just that. Incentivization of investors and interest really insofar as the greenfield capital of Amravati is concerned, even as the industry wants ease of doing business to be implemented both in letter and spirit across the state. So in a nutshell, that's the long and short of what the industry and the government wants from that special economic package for the state of Andhra Pradesh.
Well, on the economic survey projects GDP growth for FY25 between 6.5% to 7%, with risk evenly balanced. The survey also noted that the real GDP is now near pre-pandemic levels. Timsi Jaipuria lists down all the key highlights.
Well, the second economic survey, to be precise, tabled by Chief Economic Advisor V. Anantha Nageshwaran, actually says that when it comes to the GDP growth, the survey projects 6.5 to 7% growth number for the current fiscal. It also says that the real GDP is close to the pre-pandemic levels, which is quite healthy for the country. He also says in the survey that the inflation more or less remains a comfortable position for the country. But when it comes to inflation targeting, he has suggested that it is worth exploring to see that the targeting can be done without including food inflation numbers. The survey also calls for private sector to now take the baton, and I quote, take the baton on capital expenditure. A lot of capex has been happening from the public sector, that is from the states and the centre, and now private sector is something that needs to take the baton and do more capital expenditure. It also says that when it comes to the FDI, that is where a silver lining is, that FDI from China can help increase India's participation in the global supply chain. Also taking cues from the warnings given by RBI and SEBI, the survey also cautions on the speculative trading that is happening in the F&O side in the capital markets, and that is something that the survey has cautioned on. And last but not the least, on the agriculture side, the survey says that that could be a survivor and that could actually lead to further boost in the economy on the domestic side, because still 80% of the population is occupied in agriculture, and a lot of green areas and green pastures are there, which can be converted into better employment opportunities, better earnings for those employment in this sector. Let's see what cues does the budget pick up from this economic survey. Back to you.
Indeed, Timsi, thanks a lot for that. What cues the budget picks up from the from the economic survey. In fact, the chief economic advisors also called on the private sector to take the baton on capital expenditure, urged India Inc. to step up and make good of their strong balance sheet. So let's listen in on that one.
Government has done the heavy lifting in two areas very substantially. One is with its own public investment, two, getting the banking system balance sheet right and the banking system capitalized. And in fact, I would go to number three, which is that the government cut the corporate taxes in September 2019 on a sample of over 30,000 companies. Profit before tax in FY20 was 5.3 trillion or 5.3 lakh crore rupees. And FY23, it had risen to 20.6, which is almost 4 times. So the private sector has had an excellent run, which is good for them, and they have great balance sheets now. So now it is time for them to come good, or not for the sake of the economy, not for the sake of the government, but for their own sake. Because without employment generation, income growth, there will not be demand visibility, which is what they need as well. So that's why I said in the medium term, it's a win-win for them to follow through on the excellent profitability growth that we are seeing in the corporate sector.
Well, the economic survey also red flagged the rise in derivative trading volumes on the Lal Street, and the CEA has called for careful consideration on the rise in the F&O participation, but stopped short of suggesting any specific measures.
Capital market participation by retail investors is a very healthy and a very welcome thing. The issue is in what kind of capital market participation that they are engaging in. Speculative trading in futures and options is something that I have commented upon earlier, and that's exactly the point that we are driving at, because they are not exactly benefiting either the households or the purpose of capital formation in the overall economy.
It'll be very interesting to see what measures do come about, if at all, on derivatives, increased derivatives trading, as the clamor for clampdown increases as well. What we'll do is actually take a short break. On the other side, we'll get you all the cues you need to know for trade, the market setup ahead of the big budget day.
Welcome back. You're watching Budget Breakfast with me, Nigel D'Souza, and with me is Mangala Malu. Well, let's take a quick check on the Asian markets. Most of them were trading in the green. The Kospi had opened up higher, and even the other Asian markets were trading well in the green. That's why the gift would be suggesting that we open up with some green of around 30-40 points or thereabouts. In fact, let's do a quick recap of the US markets. Well, all the major indices, they rebounded on Monday. Tech stocks, they regained traction ahead of the key earnings. The S&P 500 rose to mark its best day in the last month or so. The Dow Jones Index, well, that was up roughly around 130 points. S&P 500 was up close to around 60 points, while the Nasdaq, well, that's the tech-heavy one, that outperformed after underperforming in the last week, and that was the big outperformer. And giving it company on the upside was the Russell 2000. So basically overnight, you had tech that did well, and also you had the broader markets that outperformed. Well, veteran investor and a keen Indian watcher, Mark Mobius, makes his bull case for India, says that India's growth has been good and he sees opportunity in consumer stocks. Let's hear him out.
India's gone up so much, but if you look at the latest numbers, 8% growth, real growth. Can you imagine? If you look at 8% growth, you can say double that for the growth of the market. So I believe India is still a good trade. India is where China was 10 years ago. Now we're getting into a situation where in China, you see consumers becoming more and more important. They're richer. India is now embarking on that. So as we go forward, you're going to see richer and richer Indians. The per capita incomes are going to go up. So there's going to be incredible opportunities for consumer stocks. So in addition to the tech stocks, the software stocks like Infosys, you're going to see companies like Reliance doing very, very well because they're in telecoms, they're in consumer, in addition to petrochemicals. So I believe that it's going to be an incredible ride we're going to see for India going for the next 10 years or more. Remember, the China market is driven by the Chinese, not foreign investors. Like many of these smaller emerging markets, foreign investors really drive the market, but it's really the Chinese that are driving it. And now with the housing crisis beginning to come down, people are beginning to recover from that shock. You're going to see more and more Chinese moving into the market, and the Chinese market, I believe, will move up.
All right, so that is Mark Mobius, always bullish on India, making the case for consumer stocks as well. We've spoken about how the global markets have been. So let's tell you the trade setup for our markets today, the big budget day. Nigel, what are the levels looking like?
Well, let's focus on first the FI positioning, right? They unbound some long positions in yesterday's trading session. If you look at it, close to 12,000 contracts is what they unbound in trade yesterday. They added some mild short positions as well. That doesn't take away from the fact that they continue to remain net long with 77% of their positions on the long side. And just take a look at this chart. You know, the FIs, yes, they're net long, but in the last two sessions, they've skimmed down their long positions by close to 50,000 contracts because they had moved closer to around 3.9 lakh contracts odd. And after the bit of unwinding that we've seen in some short edition, it's come down to around 3.4 lakh contracts odd. And the clients on the flip side, well, they have been the ones that have been net short. They, in fact, have covered some of their short positions. So in the last few days, from their short positions being around 2.5 lakh contracts, it's come down to a little sub that 2 lakh contracts odd. So, Mangalam, that's about how they're positioned this time around. But what does history suggest with regard to the FI long exposure, and how does the market react as well?
It's extremely interesting. You know, if you just take a look at the last few budgets, the FI is actually, like you pointed out, 77%. That's the most bullish that they've been on India on budget day itself in terms of their long exposure. So if you just look at, you know, the way the FI positioning has been in the last few budgets, you have right now the US market's doing extremely well, but here you have it. Feb 2020, the FI long exposure going to budget was just 15%. The Nifty actually fell by about 2.5% on budget day. When they were fairly bullish, the market actually moved higher. So 63% was their long exposure in Feb 2021, that budget. The Nifty on that day moved nearly 5%, one of the biggest intraday moves that we saw on the index. Feb 22, again, net short, you had 1.5% sort of move itself. Feb 23, 18% net short again. A mild dip is what we saw. So now they're going extremely optimistic with a 77% long exposure. What happens today is something that we will see. But more importantly, it's the move before the budget and after the budget that matters, and not just on the budget day. And can you make a case for what happens before the budget and what happens after the budget? Turns out not, because I'm looking at multiple scenarios here. There was a decline of about 3% 1 month before the 2014 budget. 1 month after, the market moved 7% higher. 2017, there was a big rally. Maybe people thought there would be profit taking after that. There didn't be. In fact, there was 2.5% up move in the month after the budget. 2018, we saw a big lead up to the budget, and thereafter, there was a big decline of 6% as well. Last year, 2020, we had a 4.5% decline in the month before the budget, and thereafter as well, there was another 4% decline. So if history tells you something, it means that, you know, you can't draw parallels or patterns from what has happened in the past to now. So let's talk about now itself. What's the range?
Well, you know, Mangalam, if I look at the options data, the 24,500 call, well, that's been seeing some bit of addition. So yesterday as well, that did add a fair bit of open interest, and the premiums around 300 rupees odd. So that's tell you the call writers, they're expecting the upper level. That's around the 24,800 odd to hold out, because 300, you added to the strike of around 24,500 odd. So these are the levels I'm looking at. On the downside, the 20 DMA, that's the important mark to hold out. And on the upside, the recent high is what you're looking at. And on the Nifty bank, that's going to be the big mover, right? Yesterday, it went down closer to around that 51,800 odd. And from there, it bounces. So that's the important mark that we're looking at. The 20 DMA is where it's flirting with. And if we can get past that, then we're on our way to fresh highs. So for the current trading session, these are the key triggers. But that's about the F&O market, Mangalam. What about the cash market flows?
The cash market flows, there's a very interesting trend out here because we've been talking about how the FIs have been selling the Indian markets in the past itself. April, there was a selling of close to 35,000 crores. May, there was a selling of 42,000 crores, matched dollar to dollar by the domestic institution investors. Importantly, post 4th June, the outcome of the election, the FIs slightly turned positive on India with a 2,000 crore purchase in the month of June. The DI has bought about 28,000 crores. Now in the month of July, they've shown us the money. So far in July, the FIs have gone ahead and bought 25,000 crores in the cash market, where the DI is actually giving some supply with a cut of almost 900 crores in this year itself. So this, selling of nearly 75,000 crores in April and May, can that be undone? Now everyone's calling for the FIs to put more money in India. Will that be the case? If that was the case, then probably we'll see a bigger rally in the next few months.
Well, that's what the data is indicating, Mangalam, because from the emerging market basket, India has got bulk of the flows for the month of July itself. Now, just comparing the India inflows with a market like South Korea, which has been a darling of the FIs of late, and even the Taiwanese index. So, in fact, we've seen $3.5 billion of inflows in this month itself, and the other two, well, they pale in comparison. But for this year, actually, the Indian markets getting into July, it was more or less flattish with regard to the FI flows. So it was mildly negative. Now, because of this close to $3.8 billion of inflows that we've seen, that's turned around. And that's why now India is positive for the year itself. Korea, well, that's the one that's seen a bulk of the inflows, while the Taiwanese flows as well come up for you on the screen. So the short point is the FI flows are coming in there. They're holding one end up. And in addition to that, the mutual fund industry is sitting on liquidity of more than 1 lakh crore. So in case there is any kind of shocker, there's ample liquidity that's waiting by to get in. And in the last few months, they've raised their, their liquidity position as well by close to around 30,000 crores odd. But Mangalam, we're going to be looking at the budget. But quickly, let's wind up with the global setup. They ended overnight well in the green. And today's a big day in terms of the US market for earnings.
Yes, Nigel, you speak about regulations, politics, policies, earnings and all of that and stuff. Eventually, it is earnings that matter. So, we've spoken about all the liquidity, FNOQs, etc. The setup from the globe is very good. It's a good handover. 1.6% sort of gains coming in on the Nasdaq, 130 points on the Dow as well. Big day for earnings. You have General Motors, Coca-Cola reporting their numbers before the bell. Then you have Alphabet and Tesla reporting after the bell as well. And these are important barometers of the economy from all sides. You have the manufacturing, consumption and tech too. More importantly, for India as well, we have important earnings today. On the day of the budget, HUL reports its numbers. And alongside that, we have some other companies like United Spirits, etc. as well. So a lot on everyone's plate today.
Well, that's right, Mangalam. Just to sum up 2 quick points. What the markets want is that no tinkering with regard to the capital gains. And they also want to see more reformist measures rather than populist measures. But that's it from us. Let's go across to Sudarshan. He's joining us to tell us all the key stocks that'll be in the news today. Morning, Sudarshan.
Morning, Nigel. So as we prepare for the budget, there is a good news for Federal Bank. Company is all set to get the new CEO, and this is CNBC TV18 news break is confirmed, which we reported in February. So RBI has approved appointment of KB Subramanian as MD and CEO for 3 years, and he was joint managing director of Kotak Mahindra Bank till 30th of April. Oberoi Realty, there was a positive management commentary. Company has held a con call after the market closed yesterday. Company says multiple launches are planned for festive season, looking to launch new products including mall, office and boutique hotel. Also, Pokhran Thane project launch is likely in festive season and 5 towers are being executed. Coforge's earnings were largely below estimates. Revenue has risen 2%. Margin has dropped 420 bips sequentially. Suzlon, it was a healthy set of earnings for Q1. Revenue has risen 50%. Margin was up 300 bips year-on-year. And wind turbine generator EBIT margin has risen 400 bips sequentially and 760 bips year-on-year. Jana Small Finance Bank, profit has risen 90%. NI has increased 32% year-on-year. Gross NPA has too seen a rise sequentially. Gross NPA has come at 2.62% versus 2.11% QOQ. Sand DLM revenue was up 19%. Margin has fallen 150 bips year-on-year. MRPL, there was a sharp drop in operational numbers due to increased material costs. EBITDA has fallen 74%. Margin was down 660 bips sequentially. Zensar Technologies, all the verticals have reported growth. Dollar revenue was up 4.2% and constant currency revenue was up 4.3% sequentially. Allied Blenders reported improved earnings year-on-year. EBITDA has increased 18% and margin was up 80 bips year-on-year. GE Power Company has bagged order of rupees 348 crore from NTPC. Railtel bags order of rupees 187 crore from Ministry of Railways, and Gansol Engineering bags 116 megawatt solar projects worth rupees 600 crore in Gujarat. And last is Canfin Homes. SBI Life has bought 10 lakh shares via block deals at rupees 828 per share.
Oh, thank you, Sudarshan, for that. Order wins, infra push, and no tinkering with the tax is what everyone's looking at from stocks perspective as well. We've set the entire stage up for you, told you what the policymakers are expecting, what the street is expecting, what the street is positioned for, and how the global setup is. So that sets us up for a little over 3.5 hours ahead of when the budget will be tabled, and we wrap up on this edition of Budget Breakfast. You stay tuned to CNBC TV 18 for continued comprehensive actionable coverage on Budget 2024, your budget destination.